Good morning, it's Jonathan Barrett with this week's Market Buzz. And obviously Donald Trump once again comes out and does the taco trade. Well, let's see what happens there. Gold markets tip over. Dow Jones was down 2.71%, S&P was down 1.9%, and the tech was down 3.79%. Basically, Trump came out and threatened China with massive 130% tariffs on rare earths. A big play that Donald Trump's looking at, particularly in Australia. He also threatens to cancel a meeting with Mr. Xi Jinping, and that in itself might look to destabilise global growth, which is a little bit of issue. Not only is Trump sort of fighting with that, he's also got problems with the Fed because the Fed doesn't really understand what data's there because the government is in lockdown. And BLS still in shutdown, lockdown, whichever way, not shutdown actually. Due to the budget deficits and the inability to fund. As we mentioned in last week's report, that is a bit of an issue there because while the government is sort of shut down, not getting any data, so we don't really know what the economy is doing, and the Fed is flying blind. Now remember, the longest time we had that shutdown was with the last administration by Trump, so I think you'll expect him to play hardball. A little bit more on that a little bit later. Consumer inflation expectations, particularly out of US and Japan, came out, out of Australia came out, and consumer inflation in the States ticked up 3.2%, and that's the fourth monthly rise in a row. So maybe those inflationary numbers are starting to pick up as a result of the tariffs that Trump has imposed. On the Australian side, the consumer expectations is up 4.8%, still quite higher than what you'd expect, elevated, particularly over the RBA targets. So that to me is a concern. It's a concern across the board there that inflation is upticking. Oil slid, obviously on the back of what's happening in the Middle East. Good news there. Finally, we're getting some headway. So hopefully the hostages will be released and markets can commend themselves, I think, particularly over in the Gaza and in the Middle East. And gold continues to rally, which is great. Might come up with a little bit of profit taking. We have focused on gold in this report, so we'll spend a little bit more of an in-depth analysis on why the gold price is where it is. Will it stay these levels? Will it correct? And can we still buy it? Time will tell on that. Also, a big reversal on copper, and obviously on the back of what's happening with global growth and Trump, but still see there's supply issues there, so I think dips will be supported on the copper. Okay, let's have a deeper dive into what we think is going to happen with gold. Gold in itself continues to shine. 4,080 broke through, as we know, to new highs last week. And I guess when you look at it, what are the main drivers behind that? And there are lots of them. And, some people say it's the perfect trade. I think we can categorize them into three levels, three areas. One of them is just lasting uncertainty, which we're seeing. The other one is central bank buying, which we know about. And the final one there is the drooping dollar, US dollar, as it debases itself. So I guess when we categorize those three, lasting uncertainty, it's just this fear which we've got, and people always flight to gold. Now, yes, we've got some results in the Middle East, all positive, no doubt about that. Still got some issues out there in Russia. We've got issues obviously with China, Taiwan. So there's a lot of these concerns out there, and I think people are just saying, well, look, let's hold some gold in our portfolios. It's something we have talked about quite some time over the years, saying it's always good to have some gold in your back pocket. And of course, that's proved very well for all of us that have been following, particularly the market buzz. So I guess that lasting uncertainty is something that's there. That is not going to change while Trump is here. And given the way that he operates his government, you can expect curveballs left, right, and centre, and that's going to destabilise the market. As we've seen, equity markets under a lot of pressure, just from a comment over the weekend. But notice that equity markets under pressure, gold, under pressure, gold still up. But also note that equity markets were going up and gold was going up. So a bit of a disconnect on the two, which they used to work in tandem together. So anyway, that's the lasting uncertainty I think is there. I think central bank buying is very key to this move as well, because that actually provides the base line for support for gold. And when you look at the way the central banks, some are buying, particularly China, India, Turkey and Poland, they've all said, look, this is the store of value, we've got to have it. According to the World Gold Council, central bank purchases in 2024 exceeded 1,000 tonnes, and China also remains one of the most aggressive gold buyers so far. Just coming September, the 11th consecutive month that the PBOC was actually buying gold there. So I think you'll find that that's their total holding in gold is 74 million troy ounces, which seems to be quite large, but when you compare that to the US, then it's nowhere close to it, because the US by far, I think that the US has the most amount of gold in its holdings. And just to put that into perspective, where China sits is 2,279 tonnes. The US sits at 8,133, and by and large is the largest single central bank holder of gold. The next is Germany, followed by Italy, France, Russia, and then China. So central bank activity, it also makes sense because the US dollar, people are trying to find another narrative, just the US dollar being the main currency that we use in the world. And so they're saying, well, let's see what happens with gold, and let's move into gold. And I think that's what you're actually finding happening. A bit of debasing in that US dollar as the central currency or as a store of value. So I think the weakness in that US dollar as a global trader will change over time. And I think you'll find that weaker US dollar will also support the price of gold. So I think if anything, gold will actually sort of provide that a base on any pullback. And I think when you look at it from a technical perspective, and we will have a look at that in our trade focus this week, you'll find that technically maybe a little bit of correction, but I think the basis of this bull rally to continue will remain. One of the key things here, is it too high at these levels? Very hard to tell. The only analogy I can really bring is when you look at Bitcoin. Everyone thought it was overpriced at 25,000, and it's currently trading 130,000. So pretty major there. So yes, the market can continue and go for gold. So it's that dip and that's the area to buy. I think I'll look at it a little bit more on the technical side when we show the charts, but certainly looks quite bullish on a major dip as well. And more on that as we speak. Okay, now this week we've got a few things to look at. US earnings season is going to be quite important. We've got major banks, we've got Citigroup Group, Goldman's, JP, Chase, Wells Fargo, Bank of America, Morgan Stanley, all set to release their financial results. Let's see what happens there, but I guess if anything there, that's a good key as to how the corporate performances are performing and whether that backs up where the Dow should be. Remember, Jamie Dimon came out and said the market is a little bit overextended, and he's got a lot of punch behind the markets. So if that's the case, then I'd take a little bit of heat. And also, we saw Berkshire Hathaway coming out saying there are concerns out there. Warren Buffett actually came out and said there are some concerns out there in the economies, so things aren't going to go sideways. So some of the big key investors are starting to have a little bit of a turnaround in their thoughts. Obviously, still US government shutdown. That is an issue there, which we've got. But we've got, on another thing, in China, we've got the trade, we've got inflation, banking activity. In Germany, ZEW, so there's quite a few things out there to help us along. Now, that basically shows us the chart, the weekly chart of gold. I thought it was important to include it, and that you can see that fan that we're actually looking at, and you can get a sense that a good trend line support everywhere you can see. And I think if we do have a correction, that correction will only be positive for gold. But that's the weekly chart. Momentum study is a little bit higher, and I think if anything there, we can look for some consolidation. But effectively, quite a large sell-off, as you can see, and down under a lot of pressure here. I think we're coming at support there. But as you can see, momentum studies have shown that divergence for quite some time, and I would expect to see further downward pressure on the equity markets. It could be one of those falls and then it regains. Let's see what happens. But momentum indicators, a top in place, that also does signify to many that we do have a top there. That's S&P 500. If you also look at the Dow, once again, same sort of thing, big sell-off, good divergence. It should continue. But anyway, who knows? Plunge protection team, if you're familiar with that expression, here, there to support the prices. Interesting here though, on the local market, there is that potential there for a double top. And as you can see there, I'll just put that in, double top up there. I'll just try that, there we go. Double top up here, around that 9,000 level, quite a big level, and see some consolidation back to 8,700. So that looks all right there. Brent crude, and let's have a look. Obviously quite a large sell-off down here. A little bit unexpected as far as I was concerned, but let's see how it sort of behaves around here. Obviously Middle East tensions easing, so a bit of an issue there. So I think if anything there, we should try and find some areas. We did also mention gold and silver, but as you can see, right up there still, and also silver finally reached that $50 an ounce, which is quite huge. That also puts it at a double top when the Hunt brothers came in recently and pushed it higher. Not recently, a long time ago, and also that double top about 8 years ago. Okay, so that's it. Aussie dollar managed to regain a little bit of strength there from its sell-off, and it's been a very hard trade, but still looking all right. Love those momentum indicators. If they can stay down there and start to pick up, then Aussie will have a bit of a bounce back to the top side. Euro is also a trade we're on, and so a little bit of the sell-off continues. I would like that to come back a little bit lower. We are short there, as you know, and quite happy to be here. Quite happy to hold. Well, that's about it for this week's Market Buzz. Hope everyone has a great week's trading, and we'll certainly talk to you next week. Bye for now.